Are emerging market stocks rising the most in 2 months today on speculation that China may take more steps to boost its economic growth. But my next guest, well, he remains a little bearish on what's going on in emerging market economies, and he says they're headed for a slowdown. So what's driving his concern? Let's find out. Michael Aronstein, he's president portfolio manager at Marketfield Asset Management, helping to manage nearly $2 billion. Michael, always a pleasure.
Thanks.
Go ahead, state the case, because every time you talk about emerging markets, then there's always this second paragraph which says, oh, those economies are booming, there's great domestic demand, everyone wants to catch up to the developed world. That might be true, but that might not make you money.
Well, it has been true in the past, but I'm more concerned about the future as an investor. And I think you have two issues. One is structural and one is cyclical. The cyclical issue is that after '09, most EM economies went on a big credit binge, and you had a buildup of private sector and public sector debt in some instances, which created a big inflation wave, which then prompted their central banks to tighten, which set off kind of a decline that at present looks to be accelerating. So it reminds me a little of the sequence we underwent with the housing boom and the Fed tightening between '06 and '08. They didn't participate on the credit side in that cycle, but after the '08-'09 collapse, they did. So they've put themselves in a similar kind of dangerous posture at this point. But structurally, beyond the cyclical, which is why we've chosen now to do what we've done, or over the past 14 or 15 months, I mean, there's a timing indicator there. But structurally, I don't think people realize how deficient economies like China and India and Russia are in terms of providing the political, legal, cultural, business infrastructure that allows for the generation of internal wealth. I mean, they've progressed a little bit, but they have such a long ways to go. And, the jury is still out whether or not you're going to get any statesman-like responses from the leadership of these countries that would transfer some of the power from the central government to the private sector. And my guess is that it's going to be a very, very grudging process, which does not augur well for investors or the long-term prospects. And so that we're really at variance with the street view on this, which I understand, because if you run a big investment bank and you have people in offices in China, you're not at liberty to speak your mind about any possible downside. They really don't take kindly to that.
I want to put you on the spot. How long have you been doing this?
34 years.
Have you seen this kind of cycle before?
Yes, over and over and over again. It sounds exactly like the Nifty 50 in the mid-'70s, inflation hedges in the early '80s, Japan in the late '80s, a little bit like the technology story that in 2001, despite the fact the earnings weren't really coming through, it was okay, they could correct, but everybody knows in the long run, you've got to be part of the tech story. And then just 5 years ago, U.S. housing never goes down for a protracted period of time on a nationwide basis, and we've never had a generalized housing recession, was the story. And each time people really seized upon the immediate history, which is the way in which most people form opinion about the future is extrapolative. And that's fine as long as there's a trend in place, but at inflection points, it really is dangerous.
Brazil. Is there an inflection point happening in Brazil?
Yeah, I think so. You all published a story today. It's very interesting. The average Brazilian family now spends about 2.5 times on debt service.
That's right. What
the average U.S. family does. I think that's contrary to the popular conception.
To the conventional wisdom, right?
I think in general, people haven't gone in and examined the data closely to see what the mechanisms are at work. And, there are principles of economics that are universal. They don't vary from state to state. And the development of wealth has certain necessary preconditions. And in a lot of EM countries, those conditions don't exist. They have managed to develop a great deal of economic activity and wealth because of the influx of capital and expertise from the rest of the world. But when you have money pouring in over the transom, and people really stumbling over themselves to get into your markets and into your property and into the country.
Well, when you have luxury goods companies
Yeah.
trying to force their way in and sort of build out their operations, that may not be the greatest sign for public investors.
No, typically a real acceleration in luxury has been a very, very bad sign for equity markets in the region concerned. In fact, it's almost infallible. It's not quite as good as new headquarters or the world's tallest building, but it's very good contrary indicator.
Well said. I want to thank you very much. Michael Aronstein joining us from Marketfield Asset Management. Thanks for your insight, managing over $2 billion. Appreciate it.
Thanks, Pimm.
All right.